German business confidence deteriorated to the worst level since the early months of the pandemic on growing concerns that record inflation and limited energy supplies from Russia will throw Europe's biggest economy into a recession. Joining us now to discuss the latest data is Clemens Fuest, the Ifo Institute president. Clemens, we always appreciate your time coming on for us to break down what is happening within the German economy on the back of this kind of data. Where are we, do you think, in terms of those recession risks? How close is Europe's growth engine of the German economy to that recession now?
Well, the risk is definitely growing. I think there is a likelihood that the third and fourth quarter will be quite bad. Maybe the economy will stagnate, but it might also fall into a recession. And that's really driven by the concern about gas rationing, and it's driven by generally rising prices. So companies are really feeling this. A lot of companies have problems passing on the higher costs, in particular, of course, the higher energy costs.
So there's a problem around passing on those higher energy costs. And of course, we don't have much clarity in terms of Russia and its role in supplying that gas in the months ahead. What is the adjustment that's been made by companies? How successfully have they been able to adjust those higher prices? And do we have any clarity on when those inflationary pressures may start to ease?
Well, I think there are first signs of easing inflationary pressures. Some commodity prices have come down a little bit, also as a result of the cooling of the Chinese economy. Still, companies are reporting they have problems with the high prices and also with supply bottlenecks. At the same time, a lot of companies are trying, for instance, to replace gas by oil. A lot of heating systems are flexible, so they can be put on oil. That's more costly, but it's a possibility. Other companies are trying partly strange things, sometimes replace wood or wood-based materials, trying to burn that instead of gas. But there are wide areas of the economy where that's difficult, in particular in the chemical industry, where gas is needed for both heating and certain processes, production processes. So there are limits to this substitution.
What about the fiscal response from the German government? Is there anything that is being lined up by officials in Berlin to support this economy on the fiscal front?
Well, there is, but it's not easy to support the economy on the fiscal front because this crisis is coming from the supply side. So it's supply restrictions. So popping up demand is in a way counterproductive. What does come from the fiscal side is support for gas providers like Uniper, so preventing a collapse of gas providers. And what's also a possibility is that if companies need to shut down, they will get help to weather the storm. But it's very hard to support the economy in times where the slowdown is coming from the supply side.
Is the biggest drag going forward going to be gas or a hiking ECB?
It certainly is gas and high energy prices. So it's not just gas, it's oil, it's all types of energy, electric energy. The prices are rising, and that is a big problem for manufacturing. The hike of the ECB is in a way already priced in. So financing costs have increased, and that's felt in particular in construction, where we see rather negative data. A lot of construction projects are cancelled, really, and this is due to high prices, but also due to high interest rates, high financing costs.